Okay, well, that is the new listing. Rajesh Kothari is with us, Managing Director at AlfAccurate Advisors. Rajesh, good to have you with us here. Good afternoon. I'm sure you would have looked at JSW Infra when they came and they were raising money and doing the rounds, meeting investors, etc. Any thoughts on this one? Not that many. I mean, actually, in terms of listed port entities, you only have a couple, and JSW Infra being the second one. Your thoughts on this one?
I would not like to comment on stock specific. Yes, it is interesting company. As you rightly said, there are only, select companies available in such a space, which is going to, of course, grow over a period of time. But I would not like to comment on the company specific.
Okay, all right. Rajesh, got it. So, do you have a view on the market itself, Rajesh? I mean, how much cash are you sitting on? I don't think you take very large cash calls per se. But some that we've spoken to have said that they have raised the level of cash in the portfolio, waiting for better kind of levels across the board. So just wanted a quick word on the market itself.
Market still looks very interesting. If you ask my personal view, we are still reasonably positive on market. I think there is enough opportunity across the spectrum, be it large cap, mid cap, or even what I would say, good part of the small cap. Of course, micro cap is probably where there is a lot of, I would say, some speculation element, some bubble element is happening. So I would say clearly tell investors to get a little bit caution when you go to the extreme tail side of the market. But otherwise, we get enough opportunities across various market cap. The earnings growth has been quite strong. The balance sheet is improving. The ROEs are quite healthy. And I think valuations are still reasonable. If you look at the Nifty, for example, it is right now trading at almost close to 10 years average price to earning multiple on a FY24 basis. If you look at mid cap and small cap, yes, compared to 10 years average, they are a little bit high. But then if you look at the ROE of small cap and ROCE of small cap 10 years back, it was just 12%. Today it is almost 17%. So when your ROCE moves from 12% to 17%, clearly your average valuations of small cap index will not remain what it used to be 10 years back, unless and until if you have view that ROC is now going to deteriorate significantly. And clearly, that's not our view. So I think even mid and small cap, if you ask my personal view, the good companies within this space, I think we are getting enough opportunities across the spectrum.
Okay, got that. By the way, some earthquake tremors felt in New Delhi, so hope everyone's safe. I think as of now, agencies are saying that this could be 4.6 on the Richter scale in magnitude. So just hoping that everyone's safe and sound out there. Rajesh, hi, good afternoon. So I was noticing that you have a fair amount of exposure to industrials in different portfolios. You have stocks like Hitachi, ABB, Craftsman Auto, I think even CG Power and industrials. So I guess it's fair to then ask you about this. There's a big debate going on out there whether the best is behind these stocks. The industrial capex theme, it's been the theme of 2023. And now there's a debate on whether it's time to start booking some profits or whether you keep riding it as we get closer to general elections. What do you say?
I think clearly, we have been bullish on this theme from, I think, the last 2.5, 3 years. Since early 2021, several times. In fact, during our interaction also, we mentioned that we have been very bullish on capital goods as a theme. And it definitely has really played, very well. God has been kind. From here, I think if you ask my fundamental perspective, the big growth, be it order intake across the various spectrum is going to continue. Look at, for example, data centers. They're going to grow 5 times in 5 years. Which are the biggest beneficiary of data centers? Clearly the companies which can supply solutions for that, be it a power transformer, be it the smart grid, and the related products. And clearly few companies which we are holding in our portfolio, they are the largest players catering to that segment. Likewise, there are many other segments within capital goods, which are the new growth drivers for capital goods. Traditionally, road, port, and infrastructure, they were the growth drivers, and they grow about 3-4% per annum basis. But the new growth driver, be it renewable energy, be it automation, be it data center, be it smart grid, these are the new growth drivers, and they are growing at 20% compounding or 30% compounding for next 3 to 5 years. So the best is definitely yet to come. Now, question is how much is already priced in, and that's where one can have a debate that is it fully priced in or is it half priced in. But we remain positive, and I think India is underinvested in last 10 years. It is after last 10, 15, 20 years that we have seen the companies are reporting 20% growth in order intake, and that's after a really very, very long time. Remember, in 2003 to 2008, capital goods index went up 15 times in 5 years compared to market, which went up 5 times in 5 years. I'm not saying will it happen again? I don't know. But whether the building blocks are getting in place, 100% yes. So we remain positive. Of course, within that, you need to be selective. We also do profit booking in few parts, and we keep identifying new opportunities. So that's, of course, in portfolio, we keep doing it. But on an industrial space in general, we remain fairly positive on these themes.
I know, Rajesh, you don't want to talk about specific companies, but if I can gently nudge you in that direction, but talk about the industry. You still own Safari in your portfolio, the luggage maker?
Yes. Safari is one of our top holdings in our AAA budding list mid and small cap portfolio.
There was this thing going around that Safari has basically overtaken VIP in market capitalization. Just talk to us about that investment. I mean, what do you think really worked in its favor? Was it the top change in management which really saw Safari doing so well? Was it a competitor which faltered? What are the ingredients which kind of came together for what we've seen this company do and the stock price do?
First, undoubtedly, the management has to be great. The execution has been the best from Safari perspective. They were anyway top 3 players. And within organized, actually, there are only 3 players, VIP, Safari, and Samsonite. And each of these players have their own core competence and competitive advantage. Second very important thing, what has worked for Safari is to be relevant to the customer. That's very, very important. To a luggage kind of industry, which is otherwise a boring industry from the consumer perspective, they added life to that bag. I always say they added life to the bag. So if you, for example, if you visit airport, you can see multicolor bag, depending upon the age, people have the different preference, different styles. So that kind of thing, that's what added in last 5 years. Before 5 years, luggage used to be like luggage, they are really boring, correct? But that's no more a thing. So in terms of the SKUs, in terms of the product design, in terms of innovation, in terms of connecting to the youth, I think that has worked superly for Safari. And of course, in these last 3-4 years, the China imports becoming a problem, the trends from soft to hard luggage, all these things have further accelerated those trends. Because if you want to have a soft luggage, probably even unorganized sector in a 10 by 10 square feet room, you can probably produce one soft luggage. But if you want to produce a hard luggage, it takes 40 crores of investment minimum just to buy one machine which can manufacture that hard luggage, So a lot of things have worked in their favor, and that's where the results are in front of us.
Rajesh, just to add on to that, I've been lucky that I've got a chance to interview Mr. Jatia a couple of times. And just to give our viewers a couple of stats out there, in 2012, when Mr. Jatia, took over Safari, Safari's revenues were 1/10 of what VIP was doing. VIP was already doing 800 crores at that point of time. Safari was doing 1/10 of that. Now, as of today, VIP does around 2,100, 2,200 crores of revenues. And Safari does nearly 60% of that. So from 1/10, they're almost 60-65%, growing at a faster clip and eating into the market share big time. And Mr. Jatia, kudos to that man. The way he's grown this company, and fabulous.
Brand perception has changed.
Yeah.
And branding, marketing, way. You see it when you're out at the stores, you see that difference.
Indeed.
In terms of just getting more shelf space as well. So that's really played out. Since we're on the subject, Rajesh, just a quick word also on some of the other consumer plays that you have in the portfolio. You have Titan, you also have Trent. So I think when it comes to retail, you're playing it through the Tata Group across, different avenues. Tell us what the expectation here is. Discretionary, would you look to add more? Because that's a well-documented theory as well, right? How the upper end, the premium end of consumption, that's really taken off very well.
Well, I think probably, it is just not about the premium end. If you look at the trend, the story is completely different. In case of trend, the story is Zudio. And Zudio is not the premium end. Actually, it is a economy end. So I think it is not about whether you are on the economy side or whether you are at a executive side or whether you are at the premium or whether you are luxury. The important is how you execute that strategy, irrespective of which segment you are. So trend was actually west side, and from west side, Zudio, they added almost like roughly 1.8 million square feet in last 4-5 years. So trend has added one trend in last 5 years of trend journey. That's huge. That's massive. Am I right? How many companies have executed that? So it all comes down to your final execution, making sure that you offer relevant product to your relevant customer at the right relevant price, and to keep changing depending upon the fashion, be it Titan, be it trend, or be it like Safari, what you mentioned, across the consumer segment. I was listening to interview of Adidas CEO, and he was saying in consumer, if you want to be successful, is a one-line mantra is be relevant, because trends are changing fast. If you remain relevant, customer will keep buying your products, and that engagement will keep increasing. And if you do more of it, it adds to your operating leverage. It adds to your muscle power with your distributors, muscle power with the retailers. And that's basically finally leads to high return on capital employed and high earnings growth.
Okay, no, absolutely. Well said, Rajesh. Good conversation today. Appreciate you joining in and running us through, some of what you like and, of course, the thought process behind finding these ideas and investing in them. Thank you. Well, we'll take a quick commercial break here. We'll just take a look at the Nifty before we do that. Still down 0.5%, just above 19,500. We'll come back. We'll tell you what's happening in dealing rooms. My colleague Nimesh will get you the D Street chatter. After that, quick trading ideas with our technical experts lined up.